Hey folks, Alex here, 9 to 5 to Freedom. In today's video, we're going to have jam-packed information. We're going to talk about the market, what's going on, the continued sell-off today, what's happening this week. We'll touch on Ulti, what's going on with Yieldmax funds. Take a look at WPAY and some funds that I got into today, and I'll explain that. So if you're new to this channel, my name is Alex. On this channel, I document my journey, investing into high-yield dividends, investing into real estate and other ways of passive income that will one day replace my 9 to 5 job. If you like this kind of content, make sure you subscribe. Lots of you folks are returning customers, not subscribing. So it's very easy to do it. Just the best way to support this channel, and leave a comment below. By the way, we do have a free Discord, so make sure you check that out. Let's hop into it. Lots to talk about today. We'll start out with the fear index. We are, well, it just bumped up from 14, but we're sitting at 15 on our CNN fear index. Okay, so this one is I'm not really sure how it's weighted and all this kind of stuff, but we started the day, I think it was like at 21 today, and it continued to go down because everything was coming down today. Okay, so we'll take a look at the markets for today. S&P 500 down 0.92, the Dow down 1.18, Nasdaq down 0.84, Russell down almost 2%, volatility index up 13.5%, and gold slipped 1.31%. Now this week is very important because on Thursday, November 20th, we're going to have the reports on the job market. So that's going to be something that everybody's looking for, and I don't think there's going to be much excitement about it because we're lagging 2 months behind on the reports, and I don't think they're going to be very good. Now Bitcoin slipped today, folks. It's continued to slide downwards, and we crossed under $92,000. We are 2% down for today. For the week, we're down almost 10%. For the month, almost 14%. Continue to see this sell-off on Bitcoin. So that's quite interesting. Lots of different opinions on Bitcoin. Some folks are saying we're going to dip down into the 80s and maybe even bounce up to somewhere in the 130 to 140 range. Now, I don't know. I don't have a crystal ball. All I know is, yeah, those who bought in at 125, hoping it would go to 150, are probably hurting right now. Okay, let's talk about the other important event this week, and that's Nvidia. Nvidia is going to report their earnings at the close after market closes on Wednesday the 19th. Okay, so today it slipped 1.83%. For the week, it's down 4.34%. And for the month, we are up almost 2%. Now, with Nvidia, I think most of the consensus is that the earnings should be good. However, there's a lot of worry that the market will still react negatively as they have with the other earnings that came in the last couple of weeks. It seems like every earning report that we're getting, especially on the tech sectors, is followed by a sell-off. One prime example is something like Palantir. We've seen that they had very good earnings, but unfortunately they still had a sell-off. Look at this. Palantir is down almost 10% in the past 5 days, down almost 4% in a month. So something to look out for. Now let's touch base on WPAY. You know that I've held this position. At one point I did get out of it. I took a loss on this position. Today it slipped again with the Nasdaq coming down. A lot of these are in the tech sector, so that is to be expected. I did post a video on a breakdown on some of the holdings of WPAY, and I think that was enlightening for folks who are looking at it. So I still think it could be a strong position. However, I had to cut my losses. But today we were down to $47.30 at the close of the market. Looks like a slight uptick in the after hours. Now the same thing's going on with Nasdaq. We see that it has been selling off throughout the day, and we're down 0.85% at almost before the close. We started to see a small consolidation here, and we ended the day about 604 close 604.18. Now it is interesting what's going to happen in the after hours. Is this just going to ride flat, or is this going to continue to come down? Now if we look at our 6-month chart, we see here that we have slipped back really to October 17th with the current price. which was pretty much the same price back in September 22nd. So we see this volatility here. Now, some folks are thinking that we might be retesting some of the previous lows. So possibly in the 588 space. Not sure, don't have a crystal ball. But if Nvidia does slip, Nvidia being the largest company in the world at this point, I could see how a domino effect could happen. So something to watch out for there. Don't try to scare anybody here, but it is what it is. You know, it's a type of environment we're in. Let's talk about Ulti here real quick here. Yeah, so not very good news for Ulti. Again, it's down 2.14%. We're almost under the $4 mark now. A few weeks ago, I said that Ulti will never be $5 again. I think it's pretty much safe to say that within a week or two, Ulti will never be $4 again. But wait, it will be $4 again because, and that leads us into the next point of discussion, is the fact that Ulti and other Yieldmax funds are actually going to have a 10-to-1 reverse split. Now, folks at Yieldmax promised no more reverse splits. However, that is not what the filing shows, that they filed back in November 14th at 1 to 10 split ratio here. As you can see here, if you hold 1,000 shares of Ulti, you'll now have 100 shares of Ulti. So basically, your price of Ulti, so if we do this reverse split as of today, that would mean that each share of Ulti would now be $40.12. Now, that is their clever system of staying relevant in the market, not being delisted as a penny stock. And it's going to continue to do the same thing it has done in the past, which is pay out at its NAV and continue to erode. So that is the conclusion that I have with Yieldmax, and they did the same thing with Tesla, Nvidia, Coney, with their Bitcoin one, Murni, Tesla, XYZ, I don't know what that is, their Airbnb one, AI, Coney, and I don't know what this one is. Yeah, whatever this one is. Oh, for ARK. Okay. Yeah, so reverse split is happening. So watch out, folks. You know, this is how they hoodwink you into believing that NAV doesn't matter, all this kind of stuff. Now, let's talk about what I got into today and just got my feet wet a little bit. Now, I had a lot of folks comment on this in the past comments, so thank you for discussing this. And also, we've been talking about this in the Discord community. Make sure you check that out. Great conversations there. Absolutely free. Just use the link in the description below. But tappalpha, okay? So they had a fund called TSPY, which has actually been around the block for quite a bit. If we look up TSPY and we'll look at the maximum chart, this fund has been around since August 16, 2024. Okay, so we have over a year of history on this fund. And you can see here, for the most part, it's pretty much flat at 2% up. But it does pay pretty nice dividend, which is pretty cool. Now, what I did is I threw in T-SPY versus SPY-I, and I just ran it back to January 1st of this year. And I just wanted to compare that to performance on the one year-to-date chart here. And you can see here, now this looks like T-SPY actually outperformed SPY-I since January 2nd, and looks like total return here 14.95% for T-SPY, 13.98% for SPY-I. So that's pretty cool. Now, if we look back to the day that it was launched, which we said that was August 16th of 2024. Let's take a look here, August 16th, 2024. Oops. And we have, again, T-SPY outperforming SPY-I, total return at 22.33% versus SPY-I at 18.91%. And that is with dividends reinvested. Now, if we don't reinvest the dividends, performance of T-SPY at 20.39% and SPY-I at 17.37%. So that's pretty interesting because SPY-I think is an excellent fund, and T-SPY is, according to this, leading the way. Now let's just compare it to the S&P 500, T-SPY versus S&P 500, and just see if we are anywhere close. Now we see that there's a slight lag behind T-SPY versus SPY, but I would say that it's not by much. 22.33% versus 23.06%, and with dividends, without dividends reinvested, we are at 20.39 versus 22.84. So T-SPY is very, very close to SPY, and what is cool is the fact that, let's see here, overview, it pays out 14.35% on a monthly basis, and its expense ratio is at 0.77%. Market price at $25.17. So I'm not sponsored by tappalpha. I think it's a pretty neat fund because I do like the NEOS funds, and this seems to be outperforming it. Now, one thing to note is they did launch TDAC, which is the NASDAQ version of tappalpha, and that would compete against a fund like QQQI, and this one is pretty new, so we don't have much data on it at this point. Let's see here, TDAC, and we can see this one launched just September 5th, so it's been up 4.32% since its launch. Now TDAC, let's take a look here. Market price $26.29, and distribution rate of 17.41% on a monthly basis, expense ratio 0.68. So actually slightly less expense ratio than T-SPY. So I ended up buying just 10 of each one of these shares, T-SPY and TDAC. Just threw that in my portfolio when we were kind of bottoming out before the day was closing, just so I can get a little sample of it. One thing that I'm trying to do a little bit differently now is to do a little bit DCA. I'm still a bit bearish for the next couple of weeks. I think a lot of these news that are going to come out, I don't think that's going to be very good for the market. I could be 100% wrong. Again, none of this is financial advice. You guys do your own research. I'm just a guy on YouTube. But I'm sitting on the sidelines right now with some cash positions. So I'm going to see what shakes out this week. I think this week's very important. Next week is going to be obviously, we're going to be getting into the holiday seasons. And there's going to be another job report that's going to come out December 5th, which I think is going to be very critical before we finish the year. Now, there's a lot of talk, obviously, about AI bubble, all this kind of stuff. So it is too early to say whether it's AI bubble or not, but there's a lot of indicators that are not very good, and I think we just have to be cautious. So that is what we got, folks. I hope you like this kind of content. Make sure you leave a comment below and let me know what you think, what you want me to cover next. If you got some interesting funds you want me to do some research on and know what I think about them, make sure to leave a comment below. I'll try to research them and present them on the next video. Take care, folks. Have a great evening.